Wake and decode, folks. It's your daily dose of blockchain and cryptocurrency news, straight from the lab to your ears. I'm your host, and we're about to dive into the world of decentralized finance, Web3, and beyond. Grab your morning coffee and let's dig in. First off, a massive development in the US. The Securities and Exchange Commission SEC has proposed generic listing standards for crypto exchange traded funds, ETFs. This could significantly streamline the approval process, shrinking the review period from 240 days to just 60 to 75 days. The move is expected to bring more mainstream investment opportunities to the crypto space, driving growth and adoption. Now let's take a look at what happened in crypto today. Unfortunately, I don't have any specific information, as the article you provided only includes an introduction. Don't worry, we'll move on to the next story. Bitmain has just widened its Ethereum treasury lead by increasing its Ethereum holdings. This strategic move led to a significant investment in a WorldCoin treasury firm, specifically in OCTO. As a result, OCTO's shares experienced a substantial surge of over 3,000%. It's clear that this is a developing story, and we'll be keeping an eye on it. Next up, a strategy has reportedly bought $217 million more in Bitcoin after being snubbed by the S&P 500. The reason behind this move is still unclear, but it's an interesting development in the crypto market. Moving right along, Bitcoin Google searches have reached an 11-month low, indicating a decline in interest and attention towards the cryptocurrency. However, experts suggest that if the macroeconomic outlook remains favorable, investors may shift their funds from gold back into Bitcoin. It's a volatile market, folks, and we'll be watching it closely. Now let's talk about something that might surprise you. Crypto companies need traditional banking services. Yes, you heard that right. Despite operating in a decentralized space, crypto companies still require access to traditional banking services for various reasons, including corporate banking accounts, secure storage for funds, and quick access to liquidity when needed. Without traditional banking, crypto companies would face significant challenges in managing their finances and operations. Crypto crime is on the rise, folks. In April, cryptocurrency crimes resulted in losses of $161 million. The most common types of attacks include private key exploits, flash loan attacks, and smart contract exploits. However, a more alarming trend is emerging: the rise of supply chain attacks. These attacks target vulnerabilities in the complex networks of contract and service providers, potentially leading to significant losses. In a shocking report, cybersecurity firm Mandiant reveals that North Korean hackers use stolen cryptocurrency to mine more cryptocurrency through cloud services. This process, known as cloud washing, allows them to transform dirty cryptocurrency into new, untainted coins. The goals of this operation are clear: fund espionage operations, finance state goals, and sustain APT43's own existence. We also have a growing concern in DeFi, Oracle manipulation. In 2022, Oracle manipulation resulted in $219.6 million in losses, affecting various DeFi platforms. This rise in Oracle exploits led to a significant decline in total value, blocked TVL, for Oracle providers. Chainlink's decline is a clear example of this issue, with the company losing an astonishing $48 billion in TVL in 2022. Now let's talk about the finance industry's increasing adoption of blockchain technology. Tokenization is becoming the standard operating model for asset managers, banks, and firms handling securities, commodities, and intellectual property. We're seeing significant growth in stablecoins, tokenized treasuries, and tokenization potential, with analysts estimating that up to $4 trillion, $5 trillion in assets, could be tokenized by 2030. Cosmos is at the forefront of this shift, enabling the development of decentralized finance DeFi applications and providing a scalable platform for tokenized assets. This is a game changer, folks, and we'll be keeping a close eye on it. That's it for today's blockchain and cryptocurrency news. I hope you enjoyed this recap, and I'm glad we could dive into the world of Web3 and DeFi together. Before I go, let's have a little fun with a blockchain joke. Why did the blockchain go to therapy? Because it was struggling to agree on the terms. Get it? Agrees. Blockchain. Okay, maybe that one needs a little more work. In any case, thank you all for listening, and I'll see you in the next episode. Stay safe in the decentralized finance ecosystem and blockchain world, and remember, blockchain is the future.